Our next guest maintains his neutral rating. He's got a 350 price target, still a little above where we are. He's Tim Nollen, senior media analyst at Macquarie. Julia Borston, we work her. She's back in this discussion as well. Welcome to both of you. Tim, let's start with you. And yeah, I mean, it was interesting for me last hour to hear people just emphasize advertising. Is that where your attention is as well, on how quickly they can ramp up that business and that tier which has higher revenue per user?
Yes, the next big growth story for Netflix, and in fact, its way to reinvigorate subscriber growth in the U.S. and in other regions of the world where it has stalled, will be to generate more attraction to the advertising tier. Now, actually, the way to do that, in my opinion, is the password sharing plan that they're now going to bring about. So 30 million U.S. and Canada users have been using Netflix for free all these years. Now there's an opportunity to convert those either into, paid sharers on the existing plans, but actually more likely over time to convert them to fully, new subscribers on this advertising tier. And the interesting bit of news that came out for me last night on the call was that Netflix announced that they are actually making more money on the advertising tier subscribers now, after only 6 months in operation, 5 months in operation, than they do on their mid-tier, their $15.50 tier ad-free price plan. So that shows you there's a lot of money to be made in advertising. It's still very, very early days for this for Netflix. And the launch of the paid sharing plan is really, I think, going to kickstart the advertising tier over the next year or two.
Explain to me, Julia, how the paid sharing would work, and explain it so that my mother-in-law, who is on my password, will understand it.
Well, pretty soon, Tyler, you may be offered the option of paying so your mother-in-law can keep watching on your account. You might get a warning saying, hey, if you don't start paying for these additional people who've been watching from other households, we're going to cut them off. So I think what's so essential here is that Netflix has been testing out its model for cracking down on password sharing, what they're calling paid sharing, in a couple of key markets. What they announced yesterday is that they will be rolling out this paid sharing option all around the world, including in the U.S., which is, of course, its biggest and most mature market. And they're going to be rolling that out this quarter. So we're going to start to see the impact of that in the financials in the third quarter. So what they do, and the pricing is not clear yet, but what they do is they say, hey, you have been letting your account be used by other people. Would you like to pay for them to have access? So you're not going to have to pay a whole $15 or whatever else to give your mother-in-law access. But you'd be able to pay a couple dollars more to give these additional people using your account that access. So what's interesting here is it's effectively adding subscribers at a lower cost per subscriber, but it's worth it because you're keeping them in the ecosystem, and then maybe you transition them over to having their own separate account and make more money off of them, whether with ads or without.
Lynn, you can Venmo me the money. Tim, how much money is this potentially for Netflix?
Well, we've run some scenarios just in the U.S. and Canada. They've already rolled this out in Canada, but the real market, of course, is the U.S. You combine, you're talking 74 million subscribers in call it North America, U.S. and Canada. Various scenarios that we've run are seeing, an incremental $1 to $3.5 billion of revenue on a full year run rate basis. And basically the difference is if you assume that, let's say 1/3, 10 million of those 30 million, let's call them free riders, do take on either a password sharing plan or their own advertising tier. We estimate that's about $1 billion of incremental revenue on a full year run rate basis. That's an 8% incremental revenue upside to Netflix. What they announced last night was they're going to be rolling this out actually globally during Q2. Of course, you have to ramp up. So the numbers I'm talking about are, again, full year run rate basis. But if you assume 100 million subscribers and they convert a third of those, you're talking, several $billion of potential incremental revenue.